There's a lot of volatility out there right now, isn't there? Yeah, we think that gold is an asset which has clearly performed very well year to date. But if we look at some of the underlying drivers of gold, there's a number of ways that gold can win. Firstly, we have structural demand with, over the past few years, emerging market central banks buying gold, realizing that US dollar assets could be weaponized. And so as a result, looking for an alternative store of value, gold being a great option there. We've got that cyclical factor of, particularly in the US, the cutting of rates means the opportunity cost for holding gold is going to come down. And then we've also got other aspects of whether there be trade tensions. Gold will often do well when there's trade tensions. And we've got the US election playing out too, and what that might bring for fiscal spending, whether there's questions around sovereign risk of US debt, or indeed the independence of the Fed. So a number of ways that gold can perform in your portfolio. And it's particularly a defensive asset. And I think people are certainly looking for some defensiveness in portfolios right now.
And so what's the near-term as well as the long-term target? Give me the target for December 24 on gold and then December 25 on the yellow metal.
Outcomes of, firstly, US election. If we get something that, as I mentioned before, creates that unified US government where they have control over the purse strings, and we see the bond vigilantes return, you can certainly see room for 10% upside there or greater. Likewise, if we see a tariff war, you could see substantial upside in early announcements from a new president, even as early as December. But more from a long-term perspective, I think that structural demand is going to give support to the price of gold. Sort of over I would suggest a decade-long period where we do see demand from emerging countries that want to store value in vaults that they know that can't be sort of weaponized by, for example, the US looking to freeze assets of foreign nations who aren't necessarily aligned with their own geopolitical objectives. So there's that long-term driver, but those short-term catalysts, depending on how the next couple of months play out, could really see a rocket put under the price of gold.